let me also bring on board Arpit Beriwal from Motilal Oswal Financial Services joining us this afternoon. Arpit, how are you seeing the Nifty move today, and what do you make of it? I mean, at the start of the day, were you expecting us to be flat and probably in the green at all?
Very good afternoon to all. So if we see overall from the headline indices, whether we talk about Nifty or Bank Nifty, so if we see the overall index on the weekly time frame and the daily time frame, indexes are trading in a very tight range. So Nifty major support is seen around 23,200 levels, wherein the upside 23,550, 23,600 supply zone. And if we see within this, we have seen a choppiness between this range, and at the lower levels, 23,200, the buying interest is visible. At the same time, 23,450, 23,550 is the supply zone. So look at the overall chart structure wise. If we see our view is mixed on indices within this, we're expecting the market to likely to be range bound. Any decisive closing of 23,600 will trigger a fresh momentum to 24,000, whereas on the downside 23,200 is a major support. So overall it would be a buy and dip counter, but within a range, and a very stock specific action is seen within this market. However, the broader market is playing out really well. So our major focus will be the sectors and the stocks that are outperforming, and we can play the rally in that and to generate additional alpha.
Okay, and Arpit, your picks for a market like this?
So if we see, we have to go with the sector wise, and a couple of sectors are looking good. First would be from the pharma space. And if you look at the pharma index is at a multi-year high. Classical range we got on the monthly time frame. From last couple of days, we've seen some profit booking, but within that, Laurus Labs would be a preferred pick. So classical monthly setup, strong setup on the monthly time frame. Structure of higher highs, high lows is intact on the daily time frame. It is in a fresh range breakout above 1390, 1385 levels. So slowly steady, the stock can head towards 1480, 1500 levels. Along with that, if we see from the second would be from the cement space, the large cap would be Grasim. So if we see Grasim also looks very strong. So after all huge consolidation of almost 2 years, Grasim has given a finally a range breakout on the monthly time frame above 2950 levels. In last couple of days, some profit booking was seen, but today negative the formation of lower highs, and slowly steady the stock can head towards 3200, 3250 levels. So Grasim and Laurus Labs looks good for next couple of days to weeks time frame.
Okay, we'll take a bit of a breather on the show, slip into a very short break, come back with more. You want to stay with us? Last half hour, of course, of trade on the other side of this break. Of course, Arpit Beriwal continues to be with us. Sunny, it's been a while. I don't remember the last time we spoke, but I'm glad to see you. Tell me, Sunny, what are you looking at in terms of themes right now? What exactly are you advising your clients, your customers?
Good afternoon, everyone. I think when it comes to the earnings season, which has just recently concluded, one thing is pretty clear that the earning momentum is pretty robust in mid and small cap pack as compared to the frontline companies. So we have seen kind of 15 to 20% kind of earning growth for mid cap as well as small cap pack as compared to a single digit kind of earning growth for Nifty 50 companies, right? And that is the reason that we believe that ultimately the wealth creation opportunity lies in a pocket which are not part of a benchmark indices, and various themes, whether it is power and cable, wires and cables as a segment, which is an power ancillary, or whether it is a transformer or power equipment sector, which is predominantly not a part of Nifty 50 companies. So ultimately, it's the bottom of stock pickers market. We need to identify the growth stories which may not be the part of Nifty 50. So we may see Nifty 50 consolidating in a band of maybe 100 or 500 points for some more time till the time this West Asia crisis is resolved. But at the same time, there lies an opportunity in mid and small cap pack across various pockets, whether it is auto ancillary, whether it is cables and wire segment, or whether it is a power ancillary, other power ancillary play, or whether it is B2B jewelry players, structural steel tube players. So I think smaller pockets, although the total addressable market size of this industry may be smaller, but ultimately there are few companies which are delivering a very solid earning growth, at the same time sitting on a robust visibility. Although Q1 we may see some pressure in terms of margin because of this rise in raw material prices or crude oil prices, but overall seems that FY27, in case this issue is resolved, beginning second quarter FY27, then overall FY27 seems to be well placed, at least from a mid and small cap within a mid and small cap pack.
Interesting. Sunny, we spoke to some of the e-bus makers, the JBM Autos and the Electra Green of the industry, and this is substantial. This 5,000 crore rupees seems decently sized in terms of the opportunity. Also, 16,000 buses is large. What do you believe? Does this structurally change the industry as a whole, or doesn't really move the needle? More to be done on the infra side?
I think again, opportunity size definitely is pretty huge. In fact, there is an pie for there is an opportunity for each and every player to grab the share. But ultimately, announcing of flagship scheme and then rolling it out is something different ball game. The still it is the scheme is still dependent on the government spending, and that is something which leads to a lot of lumpiness in terms of sales volume. So if you see at if you look at an EV buses or EV truck sales volume, those numbers are pretty lumpy. Predominantly, quarter four usually tends to be better in terms of sales volume. But having said that, opportunity definitely is a huge. At the same time, both the Electra as well as JBM Auto, or for that matter, incumbent players like Ashok Leyland, most of the players are sitting on a huge capacity. So I think infrastructure is not an issue as far as manufacturing infrastructure is concerned. Obviously, in terms of adoption, it is a predominantly a state transport units which need to adopt this, and they need to roll out their budget to implement this plan, right? So I think long term definitely positive, but short term don't expect that every quarter there will be a consistent structural growth in terms of earning. So long term definitely we continue to remain bullish as we speak on EV bus as a theme. But one need to have a really deploy a patient capital if somebody want to create a wealth out of this story.
And Arpit, let me switch focus completely to power. 2% higher on Coal India. That stock is, I mean, on a tear, especially since last week, since that OFS announcement. Stock dipped to 429. What a great opportunity to buy, now at 481. What next on this one? Arpit, believe you're on mute.
If you see overall the energy, the power theme.
Sorry.
Yeah. So the energy theme is playing out really well. And if you talk about the chart sort of Coal India, so monthly setup, if we see from last couple of months, it has been trading in a very tight range. But in spite of the market weakness, the stock is holding well. And if you look at the monthly setup, so for almost couple of weeks also, we have seen very strong return from the lower levels. Immediate basis, on the upside, a small level would be around 490.95. And once the stock closes above 490.95 levels, we can definitely see a good up move towards 500, 550 plus levels. So looking from a short term to medium term perspective, the setup is very strong. We can see immediate basis 495 levels and then positionally 550 on the cards for next 2 to 3 months time frame with major support around 455 levels.
Sunny, would you also be as bullish with regard to Coal India? Because the run-up has been extremely sharp.
I think although there has been some improvement in terms of earning growth for quarter four, but again, not much fireworks are expected for FY27 in terms of earnings. So post OFS, definitely we have seen a very sharp up move, maybe on the back of very cheaper valuation and very high dividend yield, which Coal India commands. So would like to maintain a neutral view, would like to participate in through other part of power sector or energy sector if somebody want to ride on this energy growth story of India.
27% year to date.
After a 15% correction from 4,600 very recently for Titan, it's a good price point that the stock has come back towards. 4,000 seems to be a good support for Titan over the short to medium term. And I think keeping that as a support or maybe as a stop loss, I think traders could look at maybe buying the stock or accumulating the stock at current levels.
What's the take here, Sunny, in terms of Titan? And is there something which really stands out for you based on the commentary that you just heard?
Yeah, definitely. I think addressable market size is pretty large across all the category, whether it is eyewear, whether it is watches or accessories segment. The transition from unorganized to organized, shift from unorganized to organized is something which is playing out across for all the jewelry players, and Titan being a market leader is definitely benefiting out of that. So no doubt, I mean the opportunity is huge, and I think 15 to 17% earning figure over the period of next 4 or 5 years is not a very tall ask for an major like Titan. So I think we continue to remain bullish. Only the point which I would like to drive is that valuation continue to remain slightly expensive. So we believe the fair value of the business is closer to 4,500, 4,600. So keeping that price target in mind, one can approach Titan.
Okay. Arpit, if I can ask you a quick question. Some of these jewelry names, Kalyan, Titan, Senko, for example, any of these looking interesting to you?
So if we see the overall the jewelry space, so Titan within the large cap relative looks better because it has a major support zone, and definitely we have seen a strong recovery from the lower levels. So the stock corrected from 4,600 levels to almost 4,000 on the weekly setup. It is piercing from the lower levels from 4,050 levels. So for a slowly steadily move, Titan looks good towards 4,300, 4,400 levels. Second from the jewelry space, it would be Thangamani jewelry. So if we see, though it's not a large cap, but definitely if you look at the chart structure, we have seen a very sharp up move in last couple of weeks. And look at the setup wise also, it has given a classical monthly breakout above 4,500 levels. In last few days, we have seen a very good rally, but definitely looking at the setup wise, positionally, the stock can definitely head towards 6,000, 6,500 plus levels. So from the large cap, Titan looks good. And from the broader market perspective, Thangamani jewelry looks quite strong on the monthly time frame.
Yeah, 16% height. So that's the take with regard to IT. You've spoken about IT and more, of course. But Arpit, let me come to you on some of the consumer durable names, because that's where a large part of the buzz is. You've spoken about some of the jewelry names which are buzzing. But what about a Voltas, a PG Electro on charts for 4% move each on those?
If we see overall, this space has relatively underperformed in last couple of weeks to monthly time frame. And if I look at the chart setup on the monthly and the weekly time frame, Voltas was so far a very range bound counter. But today, definitely seeing good buying from the lower levels. So kind of double bottom pattern we have seen on the daily time frame, and we can see a move towards 1320, 1350 levels once it closes above 1300 levels. So Voltas looks good for a reversal play. Apart from that, within this space, the stocks are really very selective. So within this space, Voltas will like to stick with that with major support around 1250. The stock can head towards 1320, 1340 levels.
Okay. Let me come to you, Sunny, with regard to your take with regard to some of these consumer durable names. Good time to play them. Any favorites within that pack for you?
Coming to consumer durable, I think things are getting better as the inventory, system inventory get draw down, and FY27, maybe in case we have seen that there has been some margin pressure during the quarter 4, which is one of an peak season as far as this consumer durable names are concerned. But looks like the worst is behind for this entire sector, and would like to ride this sector rather than through B2B player, rather than focusing on B2C, because it's a highly hyper competitive market. So B2B players like Amber, or for that matter PG Electroplast, where both have disappointed in terms of margin during the quarter 4. But what we believe is that maybe FY27 should be a normalized year in terms of margin going forward. And anyway, demand continue to remain robust. The way heat wave is playing out and the way El Nino condition is being forecasted, seems that FY27 should be a far better year in terms of earnings. So would like to ride through PG and Amber.
The other bit, I'm gonna give you the opportunity to give us one solid pick between today and tomorrow. So let me give you a minute to kind of think that through and give us a response on that. Give us one solid pick for tomorrow. Kunal, let me come to you with regard to Z Entertainment, up 13%. You're seeing a strong spike on that stock. What's changing here?
Yeah. Oh, that's for me?
Yes, please.
Yeah, okay. Sorry, I missed that. I was in a zone. But I think Z, this is fantastic as a rally for Z Entertainment, because after this 15%, 13, 14% kind of a move for the stock, I was actually looking at this on a multiple scale. The delivery volumes data in the last 4-5 days, which has been super for Z Entertainment. The stock today has crossed quite convincingly about the 200 moving average. That's a big positive for stock, because I've seen multiple times that when stocks fall back below their long-term moving averages, they could go for corrections for 6 months, 1 year, and even more. And the similar happened for Z Entertainment when the stock had broken below the long-term moving average in 2024. Stock was almost at 250-40 levels at that point of time. So we could be at a point where the stock prices are signaling that there could be a big reversal at play for the stock. However, I think after today's 12-13% move, it's always wise and prudent to wait for a mild bit of a retracement. So stocks become overbought on short-term charts, and they could give you those opportunity of mild correction. So maybe I think closer to 100 levels could be a good zone where traders could look at a buy on Z treatment, but purely a very, very high risk kind of a stock.
Okay, high risk stock though. All right, Arpit, your one pick.
Go with the pharma space, and that would be Laurus Lab. So
Okay.
a very strong setup on the daily time frame, a consolidation breakout. So I think the momentum can see a next good 2 to 3% move. So we'd like to go with Laurus Lab with major support around 1400. The stock can head towards 1460, 1480 levels.
All right, so that's the opportunity that Arpit has given us. Thank you so much, Arpit. We'll let you go on that note. Thanks for coming in, giving us that view. Sunny Agarwal, give us a sense with regard to auto, Sunny. They've come out with numbers for May. The May numbers don't look all that bad. They look fairly encouraging despite all of the headwinds that are coming through. Price hikes also coming through. In fact, there were quite a few price hikes in Q4, has sustained through April and May, and it's looking resilient.
Yeah, definitely. I think at least two-wheeler and passenger vehicle as a pack has delivered a very solid set of sales volume growth for the month of May. It is the only one pocket where we see some slowdown in the commercial vehicle because most of a logistic player there, the profitability is under pressure because of the spike in the crude oil prices and the uncertain demand environment going forward. So commercial vehicle as a pack is something where we have seen that the growth momentum has fizzled out. Tractor as a segment is something where there is an overhang of El Nino. In case there is an weaker than expected monsoon, then that can dent to some extent then the demand as far as the tractor segment is concerned. So I think it seems that as, at a current juncture, two-wheeler and passenger vehicle as a pack is well placed to deliver an healthy earning growth. And within that also an export focused player like Bajaj Auto, which predominantly generate 40-45% of the business from an export market because of an rupee depreciation, they again tend to benefit at least for next 1 or 2 quarters. So that the play. So I think better to ride this story through auto ancillary, where we have seen that most of an auto ancillary players have now ventured into an non-auto pack like defense, and at the same time with an in a quest to grow faster, they are adopting an inorganic growth strategy, acquiring smaller businesses and then scaling up. So there are many few players like Minda Corp, or for that matter, Bellride Industry or Lumax Auto, Precall, a wheel supplier like Wheels India. So a smaller or mid-sized auto ancillary player, I think that is the way to participate in an auto growth story of India.
Sunny, I'm gonna ask you for a call over the next 12 months, and I'm gonna hold you to it. So I'll give you a couple of minutes to kind of think through as to what's the call you want to make. Kunal, with some of the names that Sunny just mentioned, Zentech, for example, within the defense pack, doing ever so well in trade today. Anything within defense that you like? I know you love BEL, but outside of BEL, Kunal.
Yeah, I think there are quite a few names. In fact, Zentech, Astra Micro, I think these stocks have done phenomenally well for themselves in the last 6 months, 1 year, or slightly higher term time frame for them. So I think at the current levels, Astra Micro could be one of the other stocks from the entire defense pack. The stock has confirmed a big breakout. In fact, if I'm not wrong, last week the volumes for Astra Micro were at a multi-month, multi-year high, and not just the prices. Of course, the prices are at a multi-year high for the stock price, but this mild retracement the stock has shown in last week's of volume jump indicates that I think we could be looking at a cusp of a new trend.
Okay. Sunny, one top pick and the rationale in 1 minute.
Yeah. So would like to recommend Indian Metal and Ferroalloys IMFA with a price target of 1978 or 2000 rupees. Basically, company is one of a leading ferrochrome producer in India, which predominantly is an key ingredient which is used for manufacturing a stainless steel. So recently the company has went on to acquire Tata Steel Kalinganagar facility as far as ferrochrome is concerned. and at the same time is setting up its own greenfield capacity. So that will ramp up the company's capacity from 2.8 lakh tons to closer to 5.3, 5.4 lakh tons. And again, backed by a ferrochrome mine, so chrome mine, sorry. So that will again ensure that margins are something which is protected. Again, backed by a captive power plant to take care of this expanded capacity. So what we believe is that in FY27, the company should deliver a 57% sales growth, and that number should be closer to 4,400 crore, and profit should grow by 40% and should post 600 crore kind of profit. ROE, ROC should be in the range of 18 to 20%. So I think a decent mid-size metals and mining play from a medium to long-term perspective.
Okay, thank you so much for that, Sunny. In fact, quick plug-in viewers, we will actually call the management of IMFA because it's Sunny